You're watching Silver News Daily. Subscribe for more. Anthony Cohen has just made his boldest market prediction yet, and it's causing quite a stir. He claims that silver, currently hovering around $30 an ounce, is set to skyrocket to an astonishing $1,500 in the near future. This isn't just speculation. Cohen's prediction is based on a combination of historical data, current market dynamics, and a unique set of circumstances that are aligning perfectly. Could this be the investment opportunity of a lifetime? Stick around as we delve into the factors that could make this unprecedented surge a reality.
That was about 6 years ago or so. Niobium's become a lot better known over that time period compared to today. But when I first got involved with the project, Rudy Wall, who's a very well-known prospector in northwestern Ontario, made the discovery around 2010, 2011. And after that time, we entered another very rough time in the mining industry, where it was very difficult to raise funding for exploration. And around 2017, the gold market seemed to, be showing some green shoots of interest. So Rudy had sent me some gold properties and I looked at them, but then I looked at his website and saw that he had a niobium property. And like most people, I said, what is niobium? So once I started doing some research on the metal, I became very excited about it because it's only mined three mines on Earth, two in Brazil, one in Quebec. And the one major mine in Brazil produces about 85% of the world's niobium. So it's very concentrated. Brazil as a country produces about 92, 93%. So there's very much concentration in one country. So that interested me, but what really interested me was the usages and the strategic usages. I sent you that article, which highlighted some of the military uses. So it is a critical metal on the list of the U.S. military, Canadian, EU, you name it. It's used in everything from artificial intelligence to in the chips, quantum computing, EV batteries, medical devices, oil and gas pipelines, fighter aircraft, jet engines. It's got so many strategic uses. It's so valuable. And I will bet if you talk to 10 politicians, 9.5 would have never heard of it. So it's frustrating in a way because it's something that's so important, so critical to infrastructure, military, etc. Quantum computing, which is the future of computing.
Before diving into the specifics of Anthony Cohen's prediction, let's take a closer look at the historical performance of silver and gold, two of the most well-known precious metals. Both have served as stores of value and hedges against inflation for centuries, but they offer different kinds of benefits and safety. Gold has a long-standing reputation as a safe haven asset, especially during times of economic uncertainty. Investors often flock to gold to protect their wealth when inflation is high or when the financial markets are turbulent. Over the last century, gold has shown consistent, though modest, long-term returns. For example, from 1925 to 2020, the price of gold increased from $20.63 to $1,893.66 per ounce, yielding an annualized return of around 4.87%. Silver, on the other hand, plays a dual role. While it is also considered a safe haven, a significant portion of its demand comes from industrial uses, such as electronics, solar panels, and medical devices. This dual demand makes silver more volatile than gold, but also offers the potential for higher returns in certain economic climates. From 1925 to 2020, silver's price rose from $0.68 to $17.14 per ounce, with an annualized return of about 3.46%. Understanding these dynamics is crucial as we explore the current market conditions and how they might drive silver to unprecedented heights. Silver's unique position as both an investment and an industrial metal means it reacts to a broader range of economic factors, which could set the stage for the explosive growth Anthony Cohen is predicting.
But interestingly, in January of this year, Generation Mining picked up a whole swath of claims on our southern boundary. So now, we are adjacent to them on our east and to the south. And they picked up those claims because there's some copper showings on the western part of their property. They've got something they call the Sally deposit, which is copper. And we're on strike with that. It's within a couple kilometers of our border, our eastern border with them. And then they have some other prospective land just to the southeast of us. So that's where they picked up the claims, which now join us. And the geological trend flows over onto our property. So it's just a well-located property. We've done some work over the last few years, prospecting work, flyover. So we've done, work to keep the claims current, and we're in a good location there. Finally, we've got a very interesting property in Argentina in Santa Cruz province. This was brought to me by Paul Lotka, who's a very well-known geologist in Latin America. He's had a lot of exploration success, and he was the one who prospected this property. No work had been done on it before. So we've brought that Lolita property, as we call it, to drill readiness, but it's been a long challenge to raise more money to develop that property. But, we've seen a change in government in Argentina. That province always was the best, most pro-mining province in the country. So we're hopeful that in the next couple of years, we'll be able to do something, whether it be with another company or ourselves, to at least test that property and see if there's something there. It's got a lot of potential. It's a big property, and it's got some very interesting geological anomalies on it.
Yeah, I find it interesting that you have projects across different jurisdictions. I always like to see that. When talking about the Timmins Gold Project, what are the upcoming plans for that project? Are there any catalysts in particular you see forthcoming that maybe investors should be paying attention to?
No, I think actually the higher gold price goes, the better for us, because as I said, we're located to a number of producing or former producing mines. And as the gold price cuts through $2,500 on its way up, that'll make gold properties more interesting. And we really want to not put maximum dollars in those properties. We'd rather farm them out to someone else and keep an interest. We want to concentrate on Good Hope, which is our flagship property, and develop that.
Silver's recent market movements have been nothing short of intriguing. After a surprising rally that pushed prices close to an 11-year high, traders are now keenly watching the factors that could drive silver even higher. The earlier spike, which caught many off guard, has established a new support level at $30.04, indicating a strong foundation for potential future gains. A key driver behind silver's price movements is industrial demand, which plays a significant role given silver's extensive use in electronics, solar panels, and medical devices. This demand, coupled with broader economic factors such as inflation data and Federal Reserve policies, creates a complex but promising scenario for silver. Investors are particularly focused on upcoming U.S. inflation data and potential interest rate cuts by the Federal Reserve. The Core Personal Consumption Expenditures, PCE, price index, a preferred inflation measure, is due for release soon. Any indications of cooling inflation could support a dovish shift in monetary policy, potentially benefiting silver prices. Moreover, the strong dollar, which has historically put downward pressure on silver, is another critical factor. A potential shift in U.S. monetary policy towards rate cuts could weaken the dollar, further boosting silver's appeal. The interplay of these macroeconomic elements suggests that silver is poised for significant volatility, with the potential for substantial gains as market sentiment evolves. As we analyze these factors, it becomes clear that silver's current market dynamics are setting the stage for the kind of explosive growth that Anthony Cohen has predicted. Understanding these drivers is essential for investors looking to capitalize on this potential surge.
And yet, a lot of people who are in positions of authority or the ability to do something don't know anything about it. And niobium's typically hosted in carbonatite rocks, And, there aren't too many massive deposits of carbonatite around. That's why it's only mined in 3 places in the world. Also, in some of the places where carbonatite occurs, for political reasons, security, etc., you wouldn't want to be going into those places. So, that's why, again, there's only 3 mines in the world. And Rudy made a very important discovery in northwestern Ontario, and it's close to infrastructure, Trans-Canada Highway, CP Railway, hydro, the town of Marathon. It's only about 25 minutes down the Trans-Canada Highway from Marathon. So it's got a fantastic location, which is important in mining, because if you have a great deposit, but you're in the middle of nowhere, it can take hundreds of millions or even billions of dollars to build the infrastructure to service that. So we got that all there already. And so when I saw that, I optioned the property from Rudy, and that was in 2017. In 2018, we did the first work on the property, first serious work. We did an over 5,000 meter drill program, 9 holes. We hit massive carbonatite every hole, niobium values in every hole, phosphate values in every hole. And phosphate could be potentially a nice byproduct, or if there's more phosphate than niobium, could be a nice byproduct. But we've got two elements there that could add a lot of value to the property. That said, it's been a tough time to raise money. So we raised a little bit a couple of years after we did the drilling, and we assayed more of the core. And, we came out with some pretty decent values of both niobium and phosphates.
One of the most compelling aspects of silver's potential rise is its increasing industrial demand. Unlike gold, which is primarily used for investment in jewelry, silver has significant applications in various high-tech industries. This dual demand function makes silver uniquely positioned to benefit from both economic growth and its status as a safe haven asset. The electronics industry is a major consumer of silver, utilizing it for its superior electrical conductivity in products such as smartphones, computers, and other electronic devices. As technology continues to advance and the demand for electronic devices grows, the need for silver is expected to rise correspondingly. Another significant driver of industrial demand for silver is the booming solar energy sector. Silver plays a critical role in the manufacturing of photovoltaic cells, which convert sunlight into electricity. With the global push towards renewable energy sources, the demand for solar panels is skyrocketing. According to estimates, each gigawatt of solar capacity requires approximately 12 tons of silver. This translates to a substantial increase in silver demand as countries worldwide ramp up their solar energy installations. Furthermore, the electric vehicle (EV) market is another area where silver demand is surging. Silver is used in various components of EVs, including in their batteries and electrical systems. As the automotive industry shifts towards electric vehicles to reduce carbon emissions, the demand for silver is set to grow significantly. The combined impact of these industrial demands is creating a robust foundation for silver's price appreciation. This growing industrial consumption, alongside silver's traditional role as a safe haven investment, forms a powerful argument for why silver could see substantial gains in the near future. Understanding these dynamics is crucial for investors looking to take advantage of silver's potential breakout.
I think the extremely large increase in the money supply around the major economies of the world during the COVID period is a very important factor, because gold is money. There's no counterparties. And when you have this tremendous increase in money, which in Canada, the United States, Britain, a number of other countries, Germany, where you had money basically created out of thin air to pay people to sit at home during COVID. If you have no corresponding increase in the supply of goods and services, that by definition is inflationary. So most people, a few years ago could see this coming down the road, because if you create vast amounts of money with no corresponding increase in economic output, that's highly inflationary. And, as you know, gold production inches up every year, but it's a very limited supply because it's rare. So that gold is going to increase, just based on the increase in the money supply. And if you look back in 1980, when it hit the previous peak of well over $800 an ounce, fast forward to today, I don't think it's overvalued at all when you take inflation into account, as well as the increased production costs. So, in terms of where it's going, I think in fits and starts, it's going to continue to go higher. And again, taking inflation into account and looking at the previous high in 1980 of over $800 an ounce, I think that the forecasts of $3,500, $5,000 an ounce aren't at all, unreasonable or out of line. So I do think it's going higher. As we saw, it got knocked down, I think, to 2,100 or something, but it's...
While the industrial demand for silver is indeed a powerful driver of its price, supply constraints are equally significant. The silver market is currently facing a structural deficit, which means that demand is outstripping supply. This ongoing imbalance is a critical factor that could drive prices higher. The Silver Institute has reported that the global silver deficit is projected to increase by 17%, reaching 215.3 million ounces in 2024. This deficit is primarily driven by a 2% growth in demand, mainly from industrial applications, and a 1% decline in total supply. This marks the fourth consecutive year of a structural deficit in the silver market, highlighting the persistent supply challenges. The production of silver is not straightforward. Approximately 80% of the global silver supply comes as a byproduct from mining other metals such as lead, zinc, copper, and gold. This means that increasing silver production isn't as simple as ramping up mining operations. It depends heavily on the production rates of these other metals. This indirect supply chain complicates efforts to boost silver production quickly. Moreover, visible silver inventories and significant metal stocks held by investors continue to dwindle. For example, stocks held in commodity exchange depositories and London vaults experienced a 5% decline last year, amounting to nearly 15 months of global supply by the end of 2023. This reduction in available stocks further tightens the market. Compounding these issues are geopolitical factors and environmental regulations that can impact mining operations. Political instability in key mining regions and stringent environmental policies can disrupt production and lead to further supply constraints. As silver's industrial demand continues to grow and supply struggles to keep up, this ongoing deficit could create significant upward pressure on prices. Investors and market analysts are closely watching these supply dynamics, recognizing that the persistent imbalance is a strong support for higher silver prices. This supply-demand scenario forms a crucial part of Anthony Cohen's prediction and adds weight to the argument that silver could indeed surge to $1,500.
To surround themselves with like-minded people, just by the definition, political parties, they have people with similar viewpoints. And if there is someone in the room who makes a counterpoint, usually they're not very popular. So, I think there tends to be a lot of groupthink. And, the cars themselves, work not bad. However, again, if you're in the north where there's, very extreme cold, the batteries lose a lot of charge. So, there's practicalities. If you're living in a close to downtown neighborhood and you drive downtown, they're fine. You can charge your car overnight. You're not driving far, and the technology works pretty well. But if you're talking about everybody driving them, you need one heck of a lot more infrastructure than what we've got. And, if you're going on a road trip, I recently went on a long road trip to southern Colorado to pick up my son from college. And, I rented a cargo van. and made the drive. And I can tell you, if it was an electric vehicle, I would have been out of luck because I was traveling in vast areas of, never mind electric charging stations, there weren't even gas stations, you know. So, I mean, if you ran out of power there, you would be in a lot of trouble.
The macroeconomic landscape plays a pivotal role in shaping silver prices, with several key factors influencing its potential surge to $1,500. One of the most influential elements is the stance of the Federal Reserve on interest rates and inflation. Currently, the market is keenly focused on U.S. inflation data, particularly the core personal consumption expenditures, PCE price index, which is the Federal Reserve's preferred measure of inflation. Expectations for this data suggest a slight moderation in inflationary pressures, which could signal a shift in monetary policy. If the data shows a cooling trend, it could prompt the Federal Reserve to consider easing its interest rate hikes or even cutting rates, which historically benefits precious metals like silver by weakening the dollar. A weaker dollar enhances the appeal of silver as an investment as it becomes cheaper for holders of other currencies to purchase. This inverse relationship between the dollar and silver is a critical driver that could push silver prices higher if the Federal Reserve adopts a more dovish stance. Moreover, broader economic conditions such as global economic growth, trade policies, and geopolitical tensions also impact silver prices. For instance, ongoing trade tensions or geopolitical uncertainties can drive investors towards safe haven assets, including silver, thereby increasing demand and pushing prices up. Another macroeconomic factor is the performance of competing investment assets. In times of stock market volatility, or when returns on bonds and other fixed income investments are low, investors often seek refuge in precious metals. Silver, with its dual role as an industrial and investment metal, stands to benefit significantly in such scenarios. Additionally, central banks around the world have been diversifying their reserves, often increasing their holdings of gold and silver to safeguard against economic uncertainties. This trend adds another layer of demand to the market, supporting higher prices. Understanding these macroeconomic influences is essential for comprehending why silver could experience such a dramatic rise. The interplay between inflation data, Federal Reserve policies, and broader economic conditions creates a complex yet potentially very favorable environment for silver. These factors, combined with the industrial demand and supply constraints previously discussed, set the stage for a significant upward movement in silver prices, aligning with Anthony Cohen's bold prediction.
Part of the company. And I optioned those properties from a well-known prospector, the late Buzz Neal, who put together this property package. And he had a lot of foresight because he was near what became a number of mines in those 4 properties, including a complex that Agnico Eagle currently owns. So he was right on in terms of the location. When we first became a public company, we did some drilling on the gold properties. And, you know, we hit some, I'll call it sniffs. There's always been gold discovered on the properties, but the characteristics of that east of Timmins gold camp is that you have to drill a lot. You really have to drill a lot in order to develop a resource. And after a few years there, I decided that, you know, we don't want to just keep on raising money, drilling, diluting. It'd make more sense to get in touch with some of the gold mining companies in the area, option the properties, and if they were able to develop something, you know, we'd own a small piece afterwards or a royalty. So that's what I did. I did a number of option deals. We got the properties back. So now we have them, and we're looking again with this higher gold price at hopefully finding some companies, whether they be major or cash-rich juniors, if there is such a thing, to do the work, you know, for us. And retain an interest in the properties, because, you know, I don't want to just keep on drilling and diluting and spending money on the projects. And we're fortunate 3 out of the 4 have been brought to lease. So, you know, we don't have to do a lot of work in order to hold on to the properties. In terms of our other projects. We have the Pick River property, as we call it, which is adjacent to Generation Mining, who are in the process of developing a platinum, palladium, copper, gold, and rhodium mine. Also outside of Marathon, Ontario, a very, very good location. And actually, it was Rudy Wall who picked up the claims on their western boundary. So when he offered them to us, we picked them up because we thought, this is a good location right next to what'll probably be North America's next platinum, palladium, copper mine. So we picked them up, and interestingly, that was in 2020, right before COVID.
To fully grasp the potential for silver to reach $1,500, it's crucial to compare its prospects with those of gold, another key precious metal. Historically, gold has been viewed as the more stable and reliable investment, often outperforming silver over long periods. However, silver's unique characteristics and current market conditions suggest it might have a stronger upside potential in the near term. Gold's primary demand comes from investment in jewelry, with limited industrial applications. This makes gold a go-to asset during times of economic uncertainty, as investors seek a safe haven. Over the long term, gold has delivered consistent, albeit modest, returns. From 1925 to 2020, gold's price increased from $20.63 to $1,893.66 per ounce, an annualized return of about 4.87%. Gold's ability to act as a hedge against inflation and currency devaluation solidifies its status as a cornerstone of wealth preservation. Silver, while also a safe haven, has significant industrial applications that drive its demand. The electronics, solar, and automotive sectors heavily rely on silver due to its superior conductivity and other physical properties. This industrial demand, combined with its investment appeal, makes silver more volatile, but also positions it for greater gains during economic expansions or technological booms. In recent years, silver has started to catch up to gold, particularly as the renewable energy sector has expanded. Solar panels, which are crucial for generating renewable energy, are a significant consumer of silver. As the world transitions towards greener energy sources, the demand for silver is expected to grow substantially. This contrasts with gold, which does not have the same level of industrial utility. Moreover, silver's lower price point relative to gold makes it more accessible to a broader range of investors. Smaller retail investors often find silver to be a more affordable entry point into precious metals, which can amplify demand during periods of market interest. Anthony Cohen's prediction hinges on this comparative analysis. While gold remains a strong and stable investment, silver's dual role as an industrial and investment metal, coupled with current supply constraints and macroeconomic conditions, gives it a unique edge. Silver's potential for higher returns in the near term could outpace gold, especially if the factors driving industrial demand continue to strengthen. Therefore, while gold continues to be a reliable store of value, silver's unique market dynamics and growing industrial applications make it a compelling investment with the potential for significant upside. This comparison underscores why silver, rather than gold, could be poised for a dramatic surge to $1,500, aligning with Cohen's bold prediction.
Very, I think, undervalued. It's a small sector, when you compare it to the technology sector, for example. And the recent announcement of BHP making a bid for Anglo American, shows that the companies themselves think that some of them that would be the majors, are undervalued. So, and as far as the juniors and the explorers, there's very little credit given to these companies if you look at their values, versus their land positions and the resources that they've developed. So, simple answer, yes, I think the sector is undervalued. And, if you have a continuation of an upswing in prices for gold, copper, silver, nickel, other commodities, you're going to see, I think, some increase in share prices.
Anthony Cohen's prediction of silver soaring to $1,500 is not just a shot in the dark. His perspective is rooted in a deep understanding of market trends, historical data, and a thorough analysis of current economic conditions. Let's delve into Cohen's rationale behind this bold forecast. Cohen has emphasized the unprecedented alignment of several key factors that could drive silver prices to new heights. First and foremost, the structural deficit in the silver market is a major concern. For the past 4 years, demand for silver has consistently outpaced supply, creating a persistent imbalance. With industrial demand on the rise and supply struggling to keep up, this deficit is set to continue, putting upward pressure on prices. Furthermore, Cohen points to the explosive growth in industries that heavily rely on silver. The renewable energy sector, particularly solar power, is a significant driver. The demand for silver and solar panel production is expected to increase dramatically as countries around the world accelerate their shift towards renewable energy sources.
It's probably off about 20% or so off the highs as well. So, obviously both metals are not in a bull market. They've come off quite a bit from the highs. A lot of that, I think, is market sentiment because, the market was very bullish on EV vehicles and thinking that, we're not going to need those metals as much in the future for, ICE powered cars. However, as you've probably seen in the news, Hertz fired their CEO who had made a big bet on EVs for rental cars, and no one wanted to rent them, and so the secondary market value of those cars plummeted. So Hertz had to take a huge write-off, and we're reading about EVs sitting in dealers' lots and no one buying them. So I think. I think like with everything, there's a bit of a market overreaction, and, we have to see, despite government mandates, if you don't have the infrastructure to power the vehicles, there's going to be a slowdown in the demand and slowdown in the sales of the vehicles. As an example, California has mandates, whether it's 2030 or 2035, yet, they're suffering brownouts and blackouts there because they don't have enough electricity for the homeowners, never mind, the people's vehicles. So, I don't know. I have no crystal ball. I don't know how long this slowdown will last, or, if it's permanent or what. But I would think that probably, we're closer to the low in those metals.
Anthony Cohen's bold prediction of silver reaching $1,500 might seem far-fetched at first glance, but when we examine the interconnected factors at play, it becomes a plausible scenario. Here's why everything points towards this remarkable surge being possible soon. First, let's recap the supply-demand dynamics. The global silver market is in a significant deficit, with demand consistently outstripping supply. Industrial demand, driven by booming sectors such as electronics, solar energy, and electric vehicles, continues to grow. Meanwhile, the supply side struggles to keep up, constrained by the complexities of mining and geopolitical factors. This persistent deficit exerts constant upward pressure on silver prices. Second, the macroeconomic landscape is incredibly favorable for silver. With inflation concerns mounting and the Federal Reserve hinting at potential interest rate cuts, the dollar's strength may wane. A weaker dollar historically correlates with higher precious metal prices, including silver. Investors seeking to hedge against inflation and economic uncertainty are likely to turn to silver, further driving up its price. Moreover, silver's dual role as both an industrial and investment metal sets it apart. Unlike gold, which primarily serves as a store of value, silver is essential in various high-tech and green energy applications. The surge in demand from the solar industry alone, which requires significant amounts of silver for photovoltaic cells, is a game-changer. Add to this the expanding electric vehicle market, and silver's industrial demand is set to soar. Technical analysis supports Cohen's view as well. Recent price rallies have established strong support levels, suggesting that silver is in a bullish phase. Once critical resistance levels are breached, silver could see an accelerated price increase. The market sentiment is also turning positive, with more investors recognizing silver's potential amid current economic conditions. Cohen's forecast is not just based on market analysis, but also on historical trends. Silver has shown significant price movements in the past during periods of economic instability and high inflation. The current economic environment mirrors these conditions, suggesting that history might be on the verge of repeating itself. In conclusion, Anthony Cohen's prediction of silver reaching $1,500 is underpinned by a robust analysis of supply and demand, macroeconomic trends, and technical indicators. The convergence of these factors creates a compelling case for why this unprecedented surge is possible. As we've explored throughout this video, the perfect storm of conditions is aligning, making Cohen's bold forecast not just a possibility, but a highly probable outcome. If you found this analysis insightful, don't forget to subscribe to our channel for more in-depth market insights and predictions. And remember, while this analysis is based on thorough research, it is not financial advice. Always do your own due diligence before making investment decisions. Thank you for watching.